For those folks who don't understand the connection between crop prices and ultimately the fertilizer business, explain your thesis as to how what we're seeing in corn prices and crop prices right now feeds into your bearish outlook for these fertilizer companies.
I mean, basically what happens is if you have a large crop and it drives corn pricing down, what you have is an affordability issue because farmers frequently think of these things in terms of bushels that they're paying. So if the value of the bushel is going down, then the amount of money they can pay for the fertilizers goes down as well, and it continues to put pressure on it. And typically, it also means that low crop prices mean high supply, which means the follow-on year will typically see a cut in acreage, potentially see a cut in acreage, which means less fertilizer demand going forward. So it's a cascade of events that occurs when the price of corn goes down. And corn went down because it looked like a large crop coming in from some data we saw this past week. And then there was a release today from the USDA that dropped it even further because it was even more bullish from the standpoint of large crop.
Yeah.
Bearish if you're looking at prices.
Yeah, and just to reiterate, I mean, we did get that WASDE data. It was interesting. I mean, the stockpiles is projected to go up, looking at a record corn crop harvest this year, at least according to the USDA. Give us a sense here, though, of how these companies, if at all, can maybe try to find a way to mitigate that so it causes a little bit less damage to profitability and hopefully their share price.
Well, it's really tough because they're purely price takers in the marketplace. I mean, one potential mitigation is that they cut back production and snug up the market a bit. But that's pretty difficult considering these are global markets with global producers, and simply stepping back from some tonnage would simply just mean we'll take more imports. So it's really hard to see how they can really mitigate. They can, cut their costs. We are a pretty low cost producer across the board in just about all of the major fertilizer products. So that's the best they can do is if pricing goes too low and maybe you get some other countries or producers dropping out or backing down, you might be able to see some better pricing or maybe some market share gains on volume. But it's really tough to mitigate. You're sort of just part of the process. And obviously they have no call on what's going on the crop side. That's a weather issue.
Yeah, absolutely. I'm curious if you can broaden this out, too, because anytime we talk about anything in ag, you kind of have to go outside the U.S. borders as well, because what happens, of course, in Latin America, Asia, Africa, et cetera, also has a big impact on what pricing ends up looking like right here in the United States.
Yeah, unquestionably. I mean, the markets you're really focusing on, depending on crops, you're looking at Brazil and Argentina, you're looking at China and India, Russia as well. You're not necessarily looking at them as exporters, just simply suppliers to the market. So if any of them have very large crops, that again is depressing for pricing. But by the same token, if there's a weather issue that clearly we wouldn't see something here in the US that might happen in Brazil or in China or India, and they have a crop problem, that immediately begins to turn around the situation that we're seeing right now, which is a lot of crop. And in fact, these global grains stocks to use and stocks going up for the first time in quite a while.
We only have about a minute left, but I'm curious just longer. Let's look a little bit longer term here, because when I looked at some of the commentary off a couple of the conference calls, including over in Nutrient and a few others, the executives there still seem to be bullish longer terms, looking at maybe longer term growth rates for their specific products of maybe 2 to 3% here. And I'm wondering, is there a structural case for them to meet their targets?
Yeah, I mean, the reality is over a long haul, food demand grows at about 1.5 to 2% a year, very, very regularly. It's pretty unlikely that it moves out of that, and food demand is going to keep growing. That's a demographic situation. It doesn't necessarily mean you need lots more fertilizer to do it, but it certainly can, increases the amount of product being used. And you do have some acreage gains potential in places like Brazil, where they have a lot of land that can go to agricultural use that is not today being used. And obviously that's good for fertilizer because any land they bring in needs significant fertilization to bring it into production. So there is some upside long term. The problem is the pricing is completely tied to what's going on in the grains.